I'm not encouraged. I would have been encouraged if they wanted to cut the size of government. The problem with that, though, is that government spending is part of the GDP equation. Friday, October 14th, 2022, Maneco 64, home of alternative economics and contrarian views. We're going to look at this British situation, the UK, this mini budget that's creating supposedly havoc in the financial markets. I think it's more than just a mini budget, of course. And we're told now that the Chancellor of the Exchequer left Washington, D.C. yesterday. He met with other finance ministers, with the IMF, World Bank, and he was told, reverse your tax cuts. And he's expected to do that today. Today, of course, is also the last day the Bank of England will do QE, supposedly. But I'm going to tell you what I think needs to be done to solve the, well, not even solve, because I think it's unsolvable now, but what they should have done years ago, and it's too late, in my opinion. They're only going to buy time with whatever they do, be it the mini budget or be a new budget that they have to come out with. Or some kind of medium-term plan that they always have. They never fix things right away. They always leave it to the next government, because I'm sure they're not going to be around in 5 years. So we'll look at that today. Before that, just a quick word on the markets yesterday. Yes, right after the CPI came out, and it only came out 0.1 higher than expected. It dropped from 8.3 to 8.2. The annual CPI was expected to drop to 8.1. Initial reaction, as you can see from my tweet here, was quite amazing. We saw a huge drop in the stock market, huge drop in currencies and commodities. And then all of a sudden, the market rebounded and started rallying and kept rallying. And some people were attributing that just to short covering or some options trading, and maybe the market was too short. Who knows? I think it's to do more with the fact that this whole financial system around the world, especially in the West, is highly leveraged, highly illiquid, and very dangerous. And that's why we see this kind of volatility. We saw that Janet Yellen is concerned about liquidity in treasuries. I saw Treasury market, the 10-year yield went up way above 4%, dropped back below 4%. That doesn't help liquidity too. So that's what I'll say about that. Yes, watch out. The markets are not what they seem, in my opinion. So back to the UK. I've spoken many times about this, about the fiscal situation, and you might remember it if you've been listening to me for a while. I always refer back to 2010, and I've actually found the article, and it's in the Telegraph. It's from June 2010, and it says, Budget 2010, George Osborne promises to balance books by 2015. George Osborne has said he will deliver a tough but fair budget which will balance the books by 2015. Balancing the books means that the government spends as much as it takes in. So yeah, government spending matches tax revenue. Ideally, you want that. And ideally, you never really want to run a deficit nor a surplus. So you shouldn't have any debt. Unfortunately, that's not the case. But so they've been trying this for many years. And this is one of the statements in this article. It says here, the package of measures is expected to be the most draconian in 30 years. The Chancellor will say that tough action, raising taxes and cutting spending, is unavoidable if the 155 billion deficit is to be brought under control. So the 155 billion deficit is not the debt. That's what the government overspent the year before. So, and that will be added on to the national debt. I've listened to Liz Truss saying that they're going to pay down the debt. Well, to pay down the debt, you have to run a budget surplus. So with that, I just wanted to show you this set of data here is from Trading Economics. This is from the last 25 years. And it's the UK government budget. So there's only 2 years there in the late, 98, 99, 2000, where the UK government ran tiny surpluses like of 0.1, 1.1, and 1.4%. But look at all the deficits it ran in the 21st century. It started with the small one, I know, but one of the reasons why at the time when I was working in the city, I thought things were going to get bad was that Gordon Brown was running these deficits here, 2.8, 3.3, 3.7. He kind of gave the markets a false sense of security with a few little surpluses there in the late 90s. And then he piled on the deficit and the debt. Yes, the debt wasn't as bad, of course, as now. But then you had the '08 crisis, and these crises always require, or according to them, to the Keynesians, requires the government to step in. They never really try to apply the dictum or the principle that we should just let bad businesses collapse, just like Calvin Coolidge did in 1921. He didn't interfere. There was a sharp depression in 1921 in the US, but then everything recovered quite quickly after that. But unfortunately, ever since Herbert Hoover and FDR, the Keynesians have been in charge. Yes, and Hoover was a Keynesian as well. He wasn't like a free market guy. But as you can see, when Osborne was speaking there, the deficit was at 8.6% of GDP. Yeah, 2010, that was in the aftermath of the '08 crisis. And he said, well, by 2015, we're going to have zero. We're going to balance the budget. But look at where it was in 2015. Still a deficit of 4.1. We have never balanced the budget ever since then. And the best performance was here, I think it was 2018, where there was a 2% deficit, 2% of GDP deficit. And of course, another crisis comes, 2020, and we spent almost 15% of the economy, government spending. That's why they had to do that QE, the Bank of England, to basically monetize the debt. And now the economy is going to recession again. We saw the data the other day from the UK. They're all horrible. Industrial production, manufacturing, GDP is going negative. And I guess what Truss and Kwarteng were trying to do is to grow out of this by cutting taxes and hoping that would kickstart the economy and that would cover government spending. And that's the problem I have with it, because now I'm going to show you another set of data. It's the government as a percentage of GDP. And if we look at the United Kingdom, in 2010, when George Osborne was making that budget, 2010 budget, the UK government was spending more than 50% of GDP. And look at where we're now, the latest data in 2020, 50%. So why doesn't the IMF and the people in Washington, why didn't tell Kwasi Kwarteng, yes, keep your tax cuts, Kwasi, but make sure you cut the size of government by, let's say, 5%, 7% in the next year or two, not in the medium term, because that's what George Osborne was looking at as well, a medium term, always 5 years ahead, because They don't want to take responsibility for things. It's called kicking the can down the road. So that's why I don't think this is going to improve anything. And as you can see, the financial situation of this country is getting even worse. And we can't get out of this debt, debt bubble, this debt problem that we have. And I think now as well, because Osborne and the chancellors after him since 2010, they've had the luxury of having decreasing interest rates. So the cost of government running deficits has been relatively low. But now, as I've said many times, I think the bond market has turned. We're in a bear market in bonds. So interest rates are going to keep going up, and it's going to make it even worse. So I'm not encouraged. I would have been encouraged if they wanted to cut the size of government. The problem with that, though, is that government spending is part of the GDP equation. And if they do that, we're going to be in a depression for the next decade or so, because unfortunately, we become too dependent on government spending. And it's really hard. We're between a rock and a hard place. But we'll have to see. It's going to be interesting. So today is the last day of QE for the Bank of England. And we'll have to see what Kwasi Kwarteng comes out with, if he's going to reverse everything. And believe me, the markets might react positively, might give the gilt market a little bit of a break. Investors might start buying a little bit more bonds and buying the pound, but I think it's a temporary thing. And it's not just a UK problem. It's a problem in the US as well. Look at US government spending. In 1980, it was 34% of GDP, US central government or federal government. And now it's almost 50%. In 2020, it was 46%. In 2010, it was 42. So we keep racking up all this government or public debt. And we seem to think that there is no problem having debt. But with rising yields now, it's going to make things even worse. And that's why I think there's a problem in the treasury market that Janet Yellen pointed out to, liquidity problem, because we're running out of people to buy these bonds. The only way they'll buy it if you allow prices to go down and yields to go a lot higher. Maybe people will be attracted, but then you bring the whole edifice down. So that's where we are. And now we're going to look at where the markets are this morning. So it's 8:45 a.m. London time. We've got spot gold at 1666. Good number. It's unchanged. It's been as high as 1672 and as low as 1658. Silver's up 6 cents at 1893. High's been 1908, low 1879. Dow future is up 64 points. NASDAQ 100 is up 17. S&P is up 7. FTSE's up 63 points. Eurostoxx 50 is up 35. Sterling is down 0.5%, 112.75. The euro is down 0.15 at 97.61. The dollar is up a quarter versus the yen at 147.56. That's another currency that's going down the drain there. I saw their prime minister the other day said that he's going to keep Kuroda, and he's going to, he's fine with him running a very accommodative policy. Dollar is down slightly versus the franc, Swiss franc 99.89, and the dollar is up 0.1% versus the yuan 718.50. Check the dollar ruble 63. So dollars come off a little bit against the ruble. I think we got up to almost 65 yesterday. To the other currencies here, Aussie dollar up a quarter, 63.15. The dollar is down slightly versus the the dollar is down slightly versus the Canadian dollar, 137.45, and the Kiwi dollar is up a third at 56.50. To the general commodities, WTI crude is up 0.5%, 88.50. Brent is up 0.4 at 94.06. High-grade copper is up 1% at 346.50. U.S. nat gas is down 3/4 at 685. And I've noticed that the European TTF or Dutch gas futures, that has come off a bit, 2.8%. It's trading just around 150. And to finish off, quickly look at the bond market. The 10-year gilt yield is down 8 basis points at 410. The 30-year is at 450. That's down about 5 basis points. And just to give you an idea, these yields are trading below 1% in 2020. So yes, they have come off from the highs since the intervention in the last few days by the Bank of England, but they're still, in relative terms, they've appreciated a lot in the last, year to date, since the beginning of this year. Finish off with the 10-year yield. That's down 3.5 basis points at 392. So it looks like the powers that be want to keep that 10-year yield below 4% for now. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day, a great weekend. Take care. Bye.